Well, good afternoon, everybody. Thank you again for joining us here on the latest installment of our Financial Fridays webinar series. Again, my name is Matt Fleming. I'm a certified financial planner here with Thimble Island Private Wealth. Thimble Island Private Wealth, if you're not familiar with us, we're a local financial planning firm based out of Branford, Connecticut. And today, this program is really meant to be talking to you a little bit about some of the basics of Social Security. So my goal today is to try and help you understand some of the key points of Social Security benefits. What I will say is this is going to be a very high level overview of what is Social Security and a little bit about how it works. The idea here is giving you some information that you should be aware of different options that you have and what to consider about the timing of receiving your benefits. And what I'll tell you is everybody's situation's a little bit different. And we'll talk a little bit about that here as well in terms of how we can potentially help you make the most informed decision for your retirement lives here moving forward as well. So today's agenda, we're going to talk a little bit about Social Security, obviously, the benefits that you have within there. And then, like I mentioned, what potentially next steps and actions that you can do to make sure that you're prepared to make that important decision here in your retirement lives. So first, we're going to talk about Social Security and what oftentimes when people think about Social Security, here are some of the common questions that we hear from clients that when we're having these types of conversations in our planning process. Will it be around when you retire? When can I actually start taking the benefits? And then, how do I maximize what's available to me? And that's usually a pretty big buzzword when it comes to Social Security is maximizing those benefits and taking advantage of deferral credits. So we're going to touch upon those here today. So, the fact is that a lot of times when we talk to folks, many folks like yourselves might not know the answers to all of those questions. And some of it's a little bit of a basic facts around Social Security. So according to a recent study from the Nationwide Retirement Institute, less than 40% of folks actually know what their full retirement age is. And 40% aren't sure of how much their monthly Social Security benefit actually will be. And workers within 10 years of retirement actually overestimate what their retirement benefit might be by almost 30%. So again, giving yourself that knowledge around what Social Security is, what it means to you, and what the benefits that you have available here going forward is really a power in terms of the planning that you have for retirement. What I'll tell you is that attending this session today, like I mentioned, is going to be sort of like a basic overview. But at some point, you do want to go and do a little bit more comprehensive deep dive. SSA.gov/planners is a great place to start. That's a great website. It's got numerous links to helpful pages within Social Security Administration, publications, life expectancy estimates, et cetera. And most importantly, some calculators that you can use to kind of model out and what retirement might look like with building in Social Security. So if you take one thing away, certainly take away that website as something to follow up on as well. So one of the biggest questions that we hear today, and if you watch the news, you probably have heard in some form or fashion about Social Security and some of the pessimistic news stories that are out there. The biggest thing that we hear from folks is, well, I don't know what Social Security will be, and it probably won't even be there when I retire. And that's a very, very big worry that most folks have is what is that going to look like? And is it going to be there? Is it a fair amount for me? And over 3/4 of the folks that were surveyed in a recent poll actually answered that it is a very significant worry that they have moving forward. And it's a common thread that we hear in our day-to-day conversations with clients as well. So let's take a little bit of a look to really what's happening with Social Security. So Social Security is actually a pay-as-you-go system. And what that means is that as Social Security taxes are collected from people that are working today, it goes to actually pay the folks that are retired receiving those benefits. So where a lot of this noise has sort of come into the picture is for many, many years, we had significantly more workers in the workforce that were working and paying into the system than were retired and taking money out of the system. So that actually gave us an excess that started to accumulate in what's called that sort of Social Security trust fund. So, that actually accumulated to the number you see here on the screen of 2.83 trillion at the beginning of 2023. Now, what's starting to happen is the baby boomer generation, we've started to see a larger and larger amount of folks retiring. So we're now starting to reach a point where we are starting to have more folks that are retired collecting Social Security benefits than are actually paying into the system. That's where you start to hear some of this noise about, okay, the funding of Social Security, et cetera. The reality is we're going to reach a point soon where there's not enough money coming into the system to offset the money that's going out of the system. So what's going to happen? Well, we're going to use that trust fund, that $2.83 trillion trust fund, to make up the shortfall. And that's where a lot of what you're kind of hearing today in the news is okay, that trust fund, when is it projected to sort of run out? Right now, as current estimates, it's likely to last until 2035, at which point they're projecting, and again, these are all sort of based on today's numbers, so obviously things can change, but at that point, we're projecting a 25% shortfall in Social Security benefits. And what that means is we're going to be we're only going to be able to generate about 75% of what's needed to pay the benefits that are going out. So what does that mean? Well, it means that there's likely something that's going to have to change within the Social Security system by 2035. What that is up to Washington. And if we all know how Washington works, the likelihood of anything sort of being solved before that trust fund runs out is probably a little bit smaller. They're going to kind of continue to kick it as far down the road as they can before really, but there's been some ideas that have been sort of kicked about in terms of some ways that we can help offset this shortfall or projected shortfall in 2035. One of them is increasing the wage base on Social Security taxes. So currently, as it stands today, you only pay into the Social Security system up to 184,500 of your wage base. So if you make $1 million a year, you're actually only paying into the Social Security system up to that $185,500 wage base. The challenge there is if they raise that wage base, you're probably also going to have to increase some benefits for those folks that are paying into that at a higher accelerated level. But that's one of the strategies that they've talked about. Okay, can we raise the taxes somehow? Or is there going to be some sort of reduction in benefits to folks that are claiming benefits, or some combination of both? We've also heard and we've seen, as you'll see in a couple of slides, maybe there's a push out of that full retirement age for younger folks as well. But the bottom line is that something's going to have to, change at some point and give in the future, but it's not going away. Will it look exactly what it looks like today? And if you're collecting Social Security, will your Social Security always be what it is today? Or if you're looking at your statements and saying, hey, I've got this benefit, 5, 6, 7 years down the road, is that what's going to actually be the benefit? That's yet to be seen. But again, the important thing is it's not going away. So we don't have to worry about not having any Social Security coming in the future. So let's talk a little bit about the benefits of Social Security and a little bit about when we can claim and what that actually looks like. So Social Security works on a full retirement age calculation. So This chart is actually showing you your birth year and what that corresponds to in terms of the full retirement age, the age at which you can claim Social Security benefits and get your full benefit amount based on your work history. So you can see here, as I mentioned on the previous slide that we were talking a little bit about, we've started to see that full retirement age push back a little bit year over year. For a lot of folks, especially if you were born in the 1960s, that full retirement age now is age 67. And again, that's been pushed back here, as you can see, gradually over time. That's also something that potentially in the future, maybe that changes as well for some younger folks where you have to work a little bit longer or delay taking benefits a little bit longer to receive that full benefit. Another common question that we get is okay, that's excellent. I can see what my full retirement age is, but what do I need to be eligible to receive benefits? And in order to receive Social Security benefits and eligible for that, you need to have a minimum of 40 quarters of eligible income. So that's 10 years essentially of eligible Social Security income that needs to be paid into the system to be eligible for some of your own benefit. Benefits are actually calculated on your best 35 years of Social Security eligible earnings. So ultimately, you're saying, okay, 10 years in order to get some benefit, but they're calculating on my best 35 years. Well, what if I don't have 35 years of earnings history? Well, Social Security actually uses zeros for all those years in which you were not paying into the system. So that results in a little bit of a lower benefit. But if you do have that 35-year history, they're using your best 35 years to calculate that. And it's not a full, dollar for dollar calculation, but they do take into account, your earnings history and over that 35 years when they're calculating the benefit there. Something important that you'll kind of hear as we continue to work through the presentation and talk more about this is what we always advise folks is Social Security in today's day and age, unfortunately, should not be considered your primary source of retirement income. It's important, certainly important, and we work with folks that are just getting started savings, all the way to pre-retirees, all the way through post-retirees. Something that we always talk to folks about while you're working is maximizing contributions that you're making to either employer-sponsored plans through 401ks, 403bs, or to individual retirement accounts, whether it be Roth or traditional IRAs. Those are going to be something that's really going to help you offset and use Social Security to sort of combine to make up that number that you need in retirement in terms of income to continue to sort of live your life as you would like. And the reason that we tell folks that is because with the rate of inflation that we've been seeing, unfortunately, basic needs more often than not are growing and inflating at a number that's much faster than what Social Security benefits are actually seeing as increases, in terms of the monthly benefit that you would get. What number one thing that we talk to folks about when it comes from Social Security is, should I file early? Should I file later? Should I file at full retirement age? This gives you just a real high level look at the amount that your benefit would be decreased or increased depending on when you file to receive Social Security. And it says right in the headline, the financial trade-offs. Certainly, you're eligible to start filing and receiving Social Security benefits as soon as age 62. Excuse me. And this example is based upon a full retirement age of 67. If you file for benefits at 62, you're going to see a 30% reduction in what your annual benefit is based upon what you would have at full retirement age. That is a permanent reduction. Once you file and start taking those Social Security benefits, you're still eligible for year-to-year increases based on cost of living increases. But unfortunately, you've made that decision and you're going to have that sort of lower benefit over the course of your lifetime Whereas if you wait to the full retirement age, you can see there at 67, you receive 100% of that benefit that you will see on your Social Security statements. And then for each year that you decide to delay beyond that full retirement age up until age 70, Social Security will actually credit you an additional 8% of your benefit each year that you wait beyond age 67. So you can actually receive more than what your full retirement age benefit is if you wait all the way till age 70. Again, where does it make sense, in terms of why might I take benefits earlier versus why might I wait to take benefits? Well, here's some common reasons that we see for folks taking benefits earlier. You need the money maybe to help pay your basic living expenses. You can't work any longer, maybe due to health reasons, or you have caregiver responsibilities for a family member. You lost your job. By no means do we tell folks, hey, no, you need to absolutely wait till your full retirement age. We always like to talk to folks and understand, okay, what are the circumstances around thinking about taking Social Security benefits today, and try and help guide you to make that most informed decision that you can. So what are some of the reasons that maybe some folks might wait to claim benefits? You don't need the money right now, or you're still working. You have income from other sources to tide you over. So we see this a lot with folks that maybe retire before full retirement age, and we sort of help them put together a plan that says, okay, from the other pools of assets that I have that I've saved, how can we help distribute some money to get us to that full retirement age so that we can take advantage of the full benefit that's available to us based upon what we've paid into Social Security. If you believe that you have a longer life expectancy during which higher payments in the future might be helpful, you plan to work at some point during retirement. We're seeing more and more of that where you retire maybe from your full-time career a little bit earlier, maybe 64, 65, but you're doing part-time work or consulting, and still have another source of income coming in. Or you like the idea of getting those higher benefits that are available to you over the longer term. There's no right answer. Everybody's situation is going to be a little bit different, and that's why it's very, very important to talk with folks and have that plan together before you make that decision for Social Security. Again, Social Security is meant to be money that you can count on in retirement. So, I mentioned a little bit earlier, it shouldn't be your primary source of income in retirement if possible. According to the Social Security Administration, the average retirement family receives about 38% of their income from Social Security benefits. So think about that. If only about 38% of their Social Security benefits or household income is through Social Security benefits, they have a lot of other sources that they're using to help fund in retirement. But again, it's meant to be there as a consistent income for you. In most years, it's going to adjust for inflation. So as an example, in 2025, retiree benefits actually increased at about 2.5%. That's known as that cost of living adjustment, COLA, that they often talk about. You'll hear on the news as well. The idea there is as goods and services continue to increase in price, Social Security is indexing their benefits that they provide, hopefully in line with some of the inflation numbers there. It's backed by the United States of America, and it's going to be there to pay as long as you live. Again, also, if you're married, there's some spousal benefits that are available to your surviving spouse if something happens to you, where they can actually step in and take over your benefit if it's higher than their own benefit. So all in all, it's a good sort of additive to retirement income sort of savings. As you start to plan for retirement, again, having those different sources of income in retirement will kind of help you make the most of the dollars that you have, and hopefully give you that sort of retirement picture that you're dreaming about. One of the other big questions that we get from folks is, do I have to pay income tax on the benefits that I'm receiving from Social Security? The short answer to that is yes, but it depends on sort of where your income levels are as an individual or as a household filing jointly. What you can see is if you do have very low levels of income, and that counts as, anything that you're going to be reporting as income from a taxation perspective, you actually can get away with, if you're under 25,000 as an individual or under 32,000 as a married filing jointly couple, you actually get away with not paying taxes on Social Security. And you can see it's a graduated rate then from that point to really maxing out at about 85% being taxable. But it all depends on the combined income that you have with inside the household. And that's, again, really individualized in terms of where you can fall. One of the things that we often help folks do as well is okay, how do we help you potentially, if it's important to you, stay below some of these taxation levels with pulling different levers inside of your retirement plan and buckets of money that you have saved, if possible, to try and help control the amount of taxes that you might have to pay. But again, that all comes through that planning process of identifying those different buckets of money that you have and some of the goals that you have and what those Social Security benefits look like for you. The other question that we get is okay, I'm 65 and I'm going to retire, but I'm going to get a part-time job. Should I think about claiming Social Security benefits? And the answer to that is you certainly can. But if you are working while you're receiving benefits before your full retirement age, there is a limit, and it's here in the middle of the screen, annual earnings limit, meaning this is the amount that you can earn while working for 2025. So it'll be a little bit higher for 2026 here, but 23,400 is the most that you can earn while receiving Social Security benefits prior to full retirement age without starting to see your Social Security benefit reduced. So your benefit will be reduced up to the year that you receive full retirement age by $1 for every $2 that you earned over that limit of 23,400 as an example in 2025. So on the screen here, to kind of give you a rough example of how that might look, is let's say we had a part-time job, we earned $25,000, the limit's 23,400, so we're 1,600 over the limit. So we take that 1,600, we divide it by 2, that gives us an $800 reduction in our benefit. So when you're making that decision to claim Social Security early, and you may have earned income through a job, it's important to note that your benefit's going to be reduced for anything that you earn above that limit. The year in which you reach full retirement age, the limit's actually a little bit higher. This is, again, it's designed to allow folks, hey, if we're working up until we reach 67, then we're going to retire and immediately start collecting Social Security. So the limit's a little bit higher, and the reduction is $1 for every $3 that you earn over that higher limit. In this example for 2025, the limit's 62,160. We made 65,000 as an example, so we're over by about 2,840. We're going to divide that number by 3. You can see it's a $946 reduction in your Social Security benefits. It's important to note these reductions only take place until you reach that full retirement age. So again, once you reach full retirement age, there's not any issues with you working and continuing to earn money while collecting Social Security. That's actually a strategy that we talk to folks about while you're working, perhaps at 67. Does it make sense to maybe access your full benefit as an example and maybe save more into a retirement plan through your employer? The income to yourself might net out to be about the same amount, but you're getting more into a self-directed retirement plan, and that you then could potentially pass to next generations if you don't spend, while starting that benefit as well once you reach full retirement age. Again, you'll kind of hear a common thread. Working with someone like us, our team, these are all different types of scenarios that we look at when we put financial plans together to try and help you make sure that the money's working best for you and what your goals are longer term. So a few steps that we want to just kind of cover here, wrapping up, to help you achieve retirement savings success. So hopefully you found some of this information informative, maybe learned a thing or two here today. Again, it is a high level sort of overview of Social Security and a little bit of how it works. But the goal is we want you to continue to increase your knowledge around retirement, your saving strategies that you have, as well as Social Security. We'll talk a little bit more in detail about that big picture perspective. Like I mentioned, working with a financial advisor or financial planning team certainly helps add to that, kind of knowledge and understanding how everything is working for you. Sum of all the parts is kind of how we like to explain it here is okay, I have kind of all these different buckets of money. How's everything working together to get me to where I want to be? A way that you can kind of continue to increase your knowledge. Here's a few additional resources. I know we talked about ssa.gov/planners at the beginning, but AARP actually has a great resource center on this as well. And what I'll encourage you that if you haven't done it, head to ssa.gov, get registered, and get your Social Security statement. I actually heard a rumor that they might have started mailing those again. A few years ago, they sort of put a stop to that, and you actually had to go right to that ssa.gov website to be able to pull down that statement. But once a year, you can get that statement, kind of see what the earnings history looks like and what projections for your benefits in the future might look like there. So if you haven't done that, I would definitely encourage you to think about that. And then that, like we said, a big picture perspective. So make sure that you're investing as much as you can into that employer-sponsored plan. What we will always tell folks is we're more often than not going to tell you to try and save more. That's just what we do here is we try and help you figure out, okay, how much can we save and into what areas. As far as employer-sponsored plan goes, you want to aim to invest at least enough to receive whatever the max is that the employer is going to match if they have matching within the plan. And if you're self-employed, this says SEP IRA account, invest as much as you can into that. There's also strategies where you can set up what's called a solo K, which is a 401k plan for solo practitioners, solo employers, self-employed folks as well, that actually will be, in some cases, a little more advantageous in terms of how much you can put away for yourself in terms of retirement, and your business you can make deferrals on your own behalf, and the business can actually also make contributions on your behalf as well. So SEP IRAs are great. Solo Ks have actually been a newer revelation that continue to add some additional flexibility for folks to put more away for retirement through employer-sponsored plan. And like I mentioned, what we always would encourage, consider working with a financial services professional. Again, our team here at Thimble Island Private Wealth, we've got 5 dedicated financial professionals. We've got advanced designations from certified financial planners to accredited investment fiduciaries. And the idea is to work with somebody that can help you and give you some guidance and advice on budgeting, debt management, financial goals that you have for the future, one-on-one advice, and help you educate yourself on different types of investments and different ways to invest. What we really are, we're goal-based types of planners where we try and help match those financial goals that you have with the right investments to help meet those goals and obligations that you have for the future. And certainly, if we haven't had the opportunity to speak with you a little bit about that and prepare, a personal financial plan for you, we'd encourage you to sort of reach out to us and engage with us to just to have a conversation. There's no cost to have that sort of initial conversation, or a little bit about how we work and how we might be able to help you as well on your journey to retirement. So with that, I'm happy to answer any questions that folks might have. I know, again, a lot of information there in a short period of time. What I would also mention is that if you're interested in talking very specifically about maybe your individual situation, certainly reach out to us. We'd be happy to schedule a consultation and sort of review a little bit about how we can kind of help on that front. And while we're waiting to see if there's any questions queuing up here, Marissa, what I wanted to show you is how one of the calculator tools that we can share with you and kind of create a custom review in terms of trying to help you make that informed decision on Social Security. And this is part of our financial planning software where we can walk through and we can put in personal information. So husband and wife, both employed, and talk a little bit more about, okay, when are we planning to retire? What are our benefits going to look like at retirement? And we can plug in those numbers and what that looks like. And then what we can do is we can say, okay, let's look at, okay, taking benefits at that full retirement age. And what does that look like? And then we can add new scenarios and say, instead of taking it at retirement or at full retirement age, we're going to take it at retirement, or we're going to take it as soon as possible, or we can actually have folks starting at different times and share with you what the impact that has in terms of what the first year benefits look like versus if you wait, and then what the total lifetime benefits that you might receive from Social Security. So again, just one of the many tools that we have available to try and help you understand and make that best informed decision for yourselves as you head into retirement. So Marissa, I apologize. I don't think I can see if there's any questions queued up. I'm not sure if there's anybody that has their hand raised. If you go to the bottom of the screen, there's an actions button. And there, I believe you can sort of raise your hand, and we're happy to take any questions that there might be. Okay, it looks like we have a question from Lou. Lou, if you think at the top of the screen there might be a mute button. If you unmute yourself there, we should be able to hear you, hopefully.
Can you guys hear me now?
Absolutely, hear you loud and clear.
Can you tell me a little bit how spousal benefits work? If my spouse was a stay-at-home mom for a number of years, she's now working part-time, and I just don't know how to figure out how that portion of the equation works.
Yeah, so that's a great question. And one of the things we didn't really cover too much here today, but spousal benefits are available. So the way that spousal benefits work is that if your spouse has a work history and has paid into the Social Security system, they're going to be eligible for their own benefit, or they would also be eligible for 50% of your benefit when you start to claim Social Security. So that's the key there is they're not eligible for your spousal benefit if you're not currently collecting. But if you're collecting Social Security, they actually are eligible for the greater of their benefit or 50% of your benefit. If something happens, and I think I mentioned this in the course of the program, but if something happens to you and you predecease your spouse, the spouse has the ability to assume 100% of your benefit there going forward as well. So again, depending on your individual circumstance, that's certainly something we would be happy to kind of play out a little bit for you in different scenarios. But again, if she's recently started working part-time and if she's paying into Social Security, she'll start to have a little bit of earnings history, and you can kind of go to that SSA.gov to create a profile and be able to pull down those statements once to see kind of what that sort of benefit looks like on her own. And then again, having that 50% of your benefit available when you start collecting Social Security.
Perfect. Thank you.
Absolutely. Any other questions that we can answer for folks here today? And I know probably not the best setting for personal questions if you have them, but we're happy to answer those again offline if there's more detail, individual questions that you'd like to kind of review as well. All right. Well, it doesn't look like we've got any other questions there queuing up. So with that, I certainly want to thank you for taking the time here today. Again, hopefully gave you a little bit of additional kind of knowledge and information around Social Security. As I mentioned, we're a full services financial planning firm here located in Brantford. Any additional kind of questions, follow-up that you have, if you'd like to get together to have that initial conversation around, how we might be able to help you kind of prepare for that retirement goals that you have, we're happy to do so. We're on all the major platforms there. If you're on social media in terms of Facebook, Instagram, LinkedIn, and this video today was being recorded, and we are on YouTube, and all of our Financial Friday webinar programs are there for replay. So if you know somebody that maybe wasn't able to join us today and you think they might be interested in this, give us about a week or so. It should be up on our Thimble Island PW YouTube page, and you can certainly share that with folks there as well. So with that, again, I thank you for the time here today. Hopefully everybody's got some time to get outside. It looks like a pretty nice day here in the Northeast, and hopefully enjoy some of this nice new weather. So thank you again. I look forward to speaking with everybody. And I apologize. One last thing I neglected to mention, for those that have college planning goals in their future, next month on May 15th, Friday, May 15th, will be our next installment of the Financial Fridays webinar series discussing 529 plans and college saving strategies. So would encourage you to be on the lookout in your email for that next invite as well. So with that, I promise we're done here for the day, and thank you again, and hope everybody has a great rest of the day and a great weekend. Thank you.